Hey there, my name is Hugh, and in this video, I'm going to be answering one of the most common questions I get about hedging, and that is, are cryptocurrencies good for hedging? So in this video, you'll find out what I think about hedging in the cryptocurrency market, and I'll give you the reasons why I feel that way. All right, let's get into it. All right, so first of all, let's get this out of the way. I do not believe that cryptocurrencies are a good market to hedge in. And just to clarify, when I talk about hedging, I mean taking both longs and shorts at the same time on anywhere from a shorter time frame to a long time frame. So this is pretty much all across the spectrum. I don't believe that hedging is a good idea in cryptocurrencies. Now that could change in the future if things change with the brokers or the products that you can trade. But at this point in time, as this video is being made, cryptocurrencies are not a good market to hedge in. And there are three reasons why I believe that. First, the volume in cryptocurrencies is very low compared to other trading markets, especially Forex. So let's take a look at coinmarketcap.com. They have a 24-hour volume indicator here, or a measurement. And as you can see, the most traded cryptocurrency that's not a stable coin is Bitcoin. And that only trades $12 billion in 24 hours. And as you go down, it drops off significantly. So Ethereum is about half. And then you get Binance, that's similar. And then you get Litecoin, that's about another half. So in reality, you only have a handful of tradable cryptocurrencies, which would be Bitcoin, Ethereum, and possibly Litecoin. On the other hand, if you look at Forex, traditional fiat currency trading, this was back in 2020, so this number is probably higher today, but it said that a record $2.88 trillion was traded in London in a day. So that is orders of magnitude greater than the cryptocurrency market. And when you have more volume, that means you have more liquidity, you're more likely to get the price that's on your screen, and you'll generally have lower spreads. Which brings me to my next point, which is spreads. And spreads in cryptocurrencies can be very wide and would not allow you to get in and out easily. So for example, this is a Bitcoin chart at Hugo's Way, and this is the spread, the difference between these green lines. And as you can see, that's pretty big. If you look over here, the spread is, according to this, 680.8 pips compared to a Euro US dollar spread that's at 0.7 pips right now. And every time you take a trade, you're basically paying this fee in order to take a trade. So you don't want to have a big spread. You want to have a very narrow spread. Now the Litecoin US dollar pair is at about 3 pips, so that might be okay. However, even with that pair, it brings me to my next point, which is the rollover, the swap cost on cryptocurrencies is typically going to be very high. So for example, let's take a look at the Euro US dollar, and you can see the swap that you're going to pay or get paid by holding these positions. So on the short side, you're actually going to get paid 2.91. Now don't get caught up in what that actually equates to. That's usually percentages, but it differs at brokers. So just take a look at the numbers and the relative size of those numbers. So on the short side, you're going to get plus 2.91. Now on the long side, you're going to get minus 9.89. So if you're holding a long and a short position at the same time, they're going to net out to roughly about 7, right? So minus 7. So you're going to be paying 7 to hold that hedge position. Now keep that in mind. Now let's hop over to something like Bitcoin, where we take a look at the long and the short swap. And both of them are negative 25. So the longer you hold a hedged Bitcoin position, the more you're going to pay in swap. It doesn't matter if it's long or short with cryptocurrencies, you're going to be paying a lot on both sides. So those are the three reasons why I say that cryptocurrencies are not a good market to hedge in actively. Now you could hedge if you're just doing no leverage and just one-to-one, but then you can't make a lot of money that way. The reason why you can make money in things like Forex and cryptocurrencies is because of the leverage. So if you went down to one-to-one, yes, you wouldn't be paying as much on the swap, but at the same time, you wouldn't be making that much money on each trade. You would need to have a much bigger account, maybe like $25,000 minimum. So that's why I believe cryptocurrencies are not a good market to hedge in. So if you like this video, give it a thumbs up, subscribe and hit the bell to get more videos like this, and thanks for watching.